A very good afternoon, everyone. Thank you for joining in for today's webinar. It's a CPD session, 1 hour of professional some CPD credits available for today's webinar. The topic for today's session is Disbursements Demystified. As you all can see, we would be entering the attendance links as well as the topic details and the credit information on the chat window once every 15 minutes once. So if you haven't kind of got the information on time, don't worry. We would be sharing it again at 2 p.m., 2:15, 2:30, and 3 p.m. So there is going to be 4 different times when we're going to be sharing the information for all of you to be noting it down. The ones attending, I request you to please give your attendance without fail so that we could report to Law Society with all your information to gather credits. And the topic for today's session is also going to be entered in there. So please do feel free to note from the chat window. At any time, any questions, we welcome you to use the chat window as well. And the questions would be definitely addressed towards the end of the session. All right, I think that quite a few of you joined in, and it's already 2 p.m. Eastern Standard Time, so I prefer getting started off. Once again, thank you everyone for joining in on time. I know it's a CPD session. It's going to be a little, overwhelming sometimes with CPD. Lots to learn, but at the same time, very informative, very useful for you to implement things at the practice end of it. So this is one such topic which I really look forward to showcasing to all of you, which is Disbursements Demystified. So we're basically going to see what are disbursements, what are different types of it, and how do you make these payments or disbursements, how do you manage them, which kind of bank accounts do you use, whether some people are confused, whether to use trust, whether to use general, personal credit cards okay to be used, or only business credit card. We're going to see how you can manage your disbursements, how you could pay for a disbursement and still record them Law Society compliant. That's what we're going to technically see today, and also what Law Society expects from your end when it comes to disbursements, right? So keeping in mind what are disbursements, how do you manage them, what are different types of disbursements, can you make disbursement from a trust account at all, what are the benefits of using a trust account. In fact, a lot of us think the other way around, that it's a risk to use trust to make disbursement, but that's not true at all. So we're also going to see a few examples, why not use a trust account and what are the benefits of using it, and different types of general disbursements, and how do you use a disbursement when you have to mark up on any of them to charge your client as well. So these are what we're going to see as part of today's agenda. If any one of you find my audio is not clear, I request you to use the Join Me audio instead of the computer audio. Just dial in. There's a phone coordinate available there when you click on the speaker button. I'll help you to phone into the audio coordinates. To proceed with the basics, what are disbursements? I know now many of you here have been practicing for a while, so you might be aware of what a disbursement is, but just for the beginners and the ones who have not used a disbursement at all so far, disbursement is nothing but any expense incurred on behalf of your client, which will be reimbursed by them while they are, probably paying you for a legal fee or just the disbursement alone. So any expense incurred on behalf of the client being reimbursed is known as disbursement. Now, many of you would have a trust account and a general account. and a credit card, business credit card. And you tend to use your trust account for few types of trust payouts or disbursements. Your general for specific set like photocopying and miscellaneous stuff. And credit card, yes, that is used as well in the same lines as your general account is being used. Now, keeping in mind what is the nature of the account that you're using and what is also the nature of expense that you're incurring needs to be aligned with these types of accounts that you're using. For example, let's say that you have a court filing fee that you have incurred on behalf of the client, which you are free to enter from the trust account, from the general account, from the credit card. There's nobody stopping you from using the trust account if you have money paid by the client into the trust account as retainer already, provided if you have the balance remaining in the client's trust account, right? So make sure that you arrive at the nature of expense as well as the nature of account, making sure there's no markup value when you're charging the client from the trust account. That is one point to be kept in mind. So because trust is your client's money. So basically it's a liability. That's why we say it's not your money until the money is moved from trust to the general. So you got to be careful. You cannot mark up on any of those invoices and charge the client from the trust. Hence, you are using, if you got to mark up on something, let's say the same court filing fee, you have to mark up, then I would say use a general account. So otherwise, if you're not marking up on anything, if it's an actual amount, you are well and free to use the trust to disperse any expense on behalf of the client if there is remaining or sufficient balance in the trust account for the client. That being said, when the trust account does not have sufficient balance, or you have not collected the retainer, or you don't have a trust account at all, that is when general account comes into the picture. Let's say you are either marking up on a expense, or you don't have a sufficient balance in trust, or you don't have a trust account at all. If these three scenarios are prevailing in your case, then I would say you can happily pay from your general or your business credit card or your own pocket also. Not everybody, again, would have a business credit card. It is recommended you have a business credit card to streamline on your expenses. But yes, if you don't have one, you could always use it as an owner's pocket and record it under the personal credit card there. So recording the expense information with the right date, amount, whether you're marking up, what is the method of payment, and whether it was paid on the bank, which is the general bank account, or it was paid on the credit card, or it was paid out of your pocket, or it was paid by someone else. So you owe it as a owner's pocket and drawings later to them. Making sure you record them nicely and appropriately is very important at the beginning stages. Once you identify which of the accounts you're going to use, if it's not trust, then it's general. But general, again, gets bifurcated into general account, business credit card, personal credit card, which is owner's pocket too. So there's quite a few in there, and you have to make best use of the resources available, and you'll be able to arrive at law society compliant disbursement journal or invoice at the same time. Now, what are the benefits out of using a trust account for disbursement purposes, of course? While you're using it, first of all, it is your client's money, so you don't have to, the bookkeeping requirement is relatively less when it comes to using this money straight from the trust account. You don't have to, first of all, recover any expense from the client because it is your client's money that is lying in the trust account, which is what you're using. So all that you got to do is just show it as an expense or a trust payout from trust, and it'll automatically reduce the balance from the trust account that is currently available. So your requirement for bookkeeping is definitely at least, lesser by 2 or 3 steps from what you compare it with the general account. But there are, like I said, there are some cons to it. Like you cannot mark up the value. You can only pay if you have enough or sufficient balance. You can only pay you can only use it for few types of payments. You cannot use it for things like photocopies or travel, etc. So you'd use it for more like a government expense or a court fee or such things, right? So yes, why not pay straight from trust account? It is simple to pay from trust account, but however, court fee and other types of transactions which are not used to be marked up is what needs to be paid from the trust. So please keep that in mind. If you're using trust, you're definitely recommended to use trust account for disbursements. Like I said, if you're looking at point 2 and 3 for the bookkeeping purposes, it's much simpler to be using it from the trust account. But there are only certain types of fee or expense that you could definitely use from the trust. I'm going to take a quick pause here. I see a few comments saying they're not able to hear me, but I just want to make sure my teammate is available here on the chat window. Amelia, could you please confirm if my audio is fine? And request you to help the ones who are not able to hear me. Sorry, maybe you got to turn on the computer audio. Or you might have to phone in. Thank you. Looks like my audio is fine. For the ones who are not able to hear me, who are on the chat window, I request you to please dial into the phone audio or the computer audio. Thank you. All right, so coming back to the trust account expense or disbursement, you're definitely free to use trust money as long as you have sufficient balance, as long as you're using it for court fee or other kind of fees that you're paying for it, and as long as you're not using the expense with a marked up value. These are what needs to be done. All right. Over here you have some things to do before you recover the invoice. Now, what are these? Number 1, record the expense information with the date of expense. A lot of us tend to miss out on the date and the minor details, but these go a long way when it's being audited. You need a payment reference number, you need the exact dates when it was taken out of your bank or when it was exactly spent for. And you need to know whether it was taxable, not taxable. So try and save the invoice if you have anything. And, I would recommend you to even make a photocopy of or scanned copy of those invoices. Save it on your drive somewhere so that if you're being audited someday, you can always show up on those payment receipts, which is like a brownie points for you from the auditor. So I just wanted to add that tip here. But what do you do exactly before you raise an invoice? sometimes when you're raising an invoice to the client, there could be legal fee and disbursements both on an invoice, or there could be only a legal fee. There's no question of disbursement at all. Or let's say you're done with the legal fee part, but later you incurred some disbursement, so you're raising a disbursement now. So make sure that you're recording the expense information appropriately with the date, description, with the details of who it was paid to, how it was paid, whether you use trust or you use general, or whether you use credit card, owner's pocket, how and who did you pay to. There's always a paid to field. If you're using uLaw, you would see there's a paid to field where, you know, you have to fill it. A lot of times we ignore it and move on. All that we are worried about maximum is the date, description, because these two are mandatory. Otherwise, it wouldn't allow you to save amount. And I see many of us doing only the mandatory fields, right? But when you come down, you have two fields which are not mandatory, but which is what Law Society really wants to see to, just to make sure it's a legitimate expense or a disbursement. One is who you have paid it to, and two is the payment reference numbers. These are two fields which are mostly not mandatory on the softwares we use, but which is highly recommended for you to enter, because these information gets onto your ledgers and journals, trust or general, or the disbursement journals and the ledgers that is later on submitted to the Law Society. So it is whether, you know, a small photocopy expense or a huge court filing fee or anything beyond that, you still have to record the appropriate information with completeness. That's what is more important, including the payment details and reference numbers, etc. Next, you're going to raise an invoice. Upon you raising an invoice, there are two things that you could do. One, of course, you're going to send the invoice to the client. Let them know that, hey, your trust already has some money, but I have paid it from my general account for photocopies and some additional charges, which I would like to move money from trust to the general, which is called as trust transfer. Or if there's no money remaining in trust account, the invoice that you are sending will show something called amount due, and that is going to be paid by your client as client payment into your general account. Now, if it is, there's one further step. Now, if it is paid by you from your personal account, you have not used the general or you have not used the credit card. Let's say you have used your personal money. Then you have to pay yourself too. After you have moved the money from trust to the general, the money is sitting in the general, then you can do something called drawings or bank transfer to pay yourself or pay the third party for the expense, right? Make sure you have all the details entered at this stage before you raise an invoice. Once you raise the invoice, they get posted into the respective ledgers, journals, and everything is then downloadable for you if you're using uLaw under compliances for Law Society. And all that you got to do is simply download and submit it to Law Society. As simple as that. So don't ever hesitate to use trust for your disbursement purposes, and it'll be very helpful as your bookkeeping requirement is pretty less. I have a nice question here from one of the viewers about markup value. What is markup value? Now, I'm definitely going to showcase the last 10 minutes. I get a chance, I'm going to definitely showcase you an example in uLaw, but to orally let you know what is the markup values, where something you've incurred as an expense for a certain X amount. However, you want to charge your client X plus $20 or X plus $30. So basically, you're marking up on the invoice, on the incurred expenses, because you want to make sure that you want to charge them a little bit more amount, which is called markup value on the payment that you incurred as an expense. And this cannot be done from trust, because trust account is all about paying actual amount to your, to the vendor or the third party. So please note that markup values are used only from the general and credit card and, of course, owner's pocket, not from the trust. All right, that is markup value. Now, talking about the types of disbursements, it definitely differs from practice to practice, area of practice. It totally depends on the area of practice. So when you're doing the billables, you can use both trust and general. You can use trust as long as there's no markup value. Unit rate, which is more like photocopies and stuff. I was telling you, if it's not court filing fee and etc., try using only general account, which is unit rate. And you also have travel, which is where you use only general account again, right? So keep in mind, if it's something to do with fee, filing fee, court fee, other sort of fees, where there's no room for markup, you could use trust. If there is room for markup, if you're planning to markup, then switch over to your general account. But compulsorily to use general account are like mileage, which is for travel, then travel time, then unit rate. These are all only general. Of course, if you're outsourced consultancy with profit margin again, then that is also only general. Anything with profit margin, use only general. Anything with recovery of actuals, you could use both trust and general. Recovery of expenses with profit margin again, only general. So these are the different types of disbursements. The ones which are not in trust are the ones with profit margin. Because remember, profit belongs to the firm, but trust belongs to the client, as in the money in the trust belongs to the client, unless and until it's being billed and moved from trust to the general. So if you are billing a client and then moving the money from trust to the general, that is different. That's where you use markup value and you use general account. But if you're straight away paying out from the trust, please make sure it has no profit margin at all. All right. I hope that was clear. Quickly discussing about why are we inputting these information and why so much of efforts are needed to maintain them or manage them. First of all, we do this because we want to keep a track of the expense or the recovery of the expense. Of course, it's not always about the income, but also the expense and what you make finally, which is income minus expense, profit or loss. So right now you have few documents that are needed to be submitted to Law Society on a monthly basis. One such are, few of them are ledgers, that is client's trust ledgers, general ledgers. We also have something called disbursement journal, and these disbursement journals will capture the information with regards to the date, the amount, method of payment, who you have paid it to, before taxes, after taxes, total, etc. Over here, you have disbursement journals. I'll finish the journals and then I'll go into the ledgers. Journals are more detailed view of or detailed report of what exactly happened in that particular type of activity. There could be general receipt journal, they could be general disbursement journal, they could be trust disbursement journal. All of these contain details as to commonly date, method of payment, recipient details or pay details, amount, but it's just that sometimes, there would be taxes or no taxes, total paid, other columns that could be a little different. So during these audits, Law Society audits, these are the types of journals that are being reviewed, that are being expected by you to be maintained. And these journals basically show a single type of activity. If you're looking at it, there's either receipts or disbursements. You don't see both receipts and disbursements together like ledger. I'll show you ledger shortly. But a single type of activity is recorded, and disbursement journals are maintained for both trust and general. The ones that are paid out of trust, the left-hand side bottom, it will be recorded under Trust Disbursement Journal. Again, you have the date, you have the method of payment, who it was paid to, the description, which is the purpose of the payment, and the amount. Likewise, you again have the similar one for general, but in general, we capture HST because that is where we are worried about transferring the HST amount to the government. So we want to make sure, which is covered whenever you are entering the disbursement. Make sure you are entering taxes exempt or with taxes accordingly. So that would help you. That's what is going to later on get transferred into these little journals that you're seeing here at the bottom. If they are tax exempt, they would automatically show here as HST paid equal to 0. All right. Now, if you're looking at ledgers here, ledgers that need to report disbursements, which includes both trust and general. During the audits, the disbursement ledgers, both trust and general, are being reviewed again. Over here, both the types of activities are, recorded. It's not a single type of activity like journal, but both receipts and both receipts and payments are clubbed into one ledger. That's why it has only one for trust and one for general. It's not like trust disbursement and general disbursement and, receipts accordingly. So it's all like in one page that will show you every transaction disbursed directly that needs to be recorded in the disbursement ledgers. And you also have the same one for receipts too. Based on the type of transactions, it is being maintained in trust or general respectively. For the ones that pay the retainer and that is being paid out of trust, you would be able to see the trust disbursement and the general disbursement showing up accordingly. And the ones where each ledger has a running balance, of course, you have a date, you have a running balance. As you keep transferring or paying out of trust or general respectively, you would see the balances reducing too. Okay, so please make a note that both trust and general ledgers are showing two different types of activities in one, which is receipt, money coming in, and disbursement, money going out of the respective accounts, whether it's paid directly or whether it's transferred. You would see them appropriately entered in here. It's more important to look into the minor details such as, the reference numbers, taxes paid or not, and the dates, etc., as it goes into all of these disbursements and receipts journals and ledgers too. Now, there are disbursements in fee book, and of course, fee book is nothing but you're charging legal fee to the client. That is what is fee bill. Now, if disbursements also billed along with it, it will show up in the separate column. These fee book records are nothing but fees and disbursements raised in one invoice for a client that needs to be recovered from the clients. Fee book also records invoice numbers, which client was billed, and associated taxes that were collected for fees and disbursement too. Following sample from the Law Society actually here shows you how these fee books are basically done. So over here, you're seeing that you have raised an invoice on July 2nd for a specific client with just fee being billed. There's no disbursement here. But if you had like a disbursement, obviously the fee book will also show the disbursements collected or billed for and collected from the client too. So please keep it in mind, it's not only just the journals and the ledgers, but also the fee book records that needs to be maintained every time you raise an invoice that needs to be recovered from the clients too. Now, coming to the fact that these could be done manually too, but what are the benefits of using a legal accounting software? When you're recording these events, as and when it takes place or it occurs, there's very less input or time consumed at your end, because you're technically entering the information or the data at one point that later gets converted into several documents or records or reports that is needed for you, for your client, for the Law Society, etc. Recording these as per your bank and making it as close as possible is more important. And this is very simple if you're using an accounting software, and it only is going to make your reconciliation process easier. You also have to maintain all of the documents in the software, but if you're not using the software, it's something that you have to prepare yourself. So a legal accounting software is going to just make you or allow you to print the documents based on the workflow that you have, addressed it for. And, end of the day, you find less time being spent for you to have all of these documents in place and being Law Society compliant, keeping your client happy at the same time. Your accounts is also up to date. Now, it's all about, like I said, being compliant. You have the accountability, ease of use. Just imagine you having to do all of these ledgers and journals that you're in, which is even more difficult. So a simple thought process here is to record these transactions under the respective clients and download the respective forms that you need for your Law Society respectively. So there's a lot of ease of use. You have analytics that goes behind the picture, which is which is what is seen on the paper and end of the day as a report. And a lot of accountability, because you tend to replicate what happened in the bank. So you want to make sure that they are aligned, they're in the same lines. And also the compliances, which is one of the most important part. Those ledgers, journals, fee books, dockets, documents, everything is available for you in finger click button if you are using a legal accounting software. Okay. So if you're not a user of uLaw, I highly recommend you to try signing up for a free trial so that you could see how these features are being used. I'm just taking a quick pause here to see if there are questions. There are some interesting questions. One of you have asked, for courier, we charge some amount. Later, if we didn't send the courier, or if the amount we charge is more than real expense, what do we do and how do we record? Okay, now if I'm understanding this is something that you're going to pay out of your general account. Let's say you're charging your client an amount, but you have not incurred that courier charges yet. Let's say you're raising an invoice to the client today, saying that this is your legal fee, $1,000, and there's a disbursement of $50 being added to that bill for the courier fee. You'll have to use general account here. Please use if you of course I'm assuming you're using uLaw. There's a tab that says add new disbursements from general account. So if you use that, you could just simply add the expense disbursement along with the legal fee, raise the invoice, send it to the client. Don't fill the bottom portion of, you're not reporting any expense because you have not incurred the expense yet. You have two choices. You can either put it under accounts payable if you are going to be paying for it later, or just leave the bottom portion empty, which you can always make use of when you're, paying for it. You can come back to the matter and edit it and enter the bottom portion saying, I have now paid the $50, right? So that would be in alignment with your books or your bank too. Rather, your books will be. Do we need to have the receipt for courier? Yes, I would highly recommend you to have one. At least, take a copy and keep it in your drive somewhere in that matter itself, because it's always good to have additional documents. It's not mandatory. It's such a small thing. I know courier fee is not very significant, but it's nice to have. Like I said, these are just brownie points to impress your auditor, to make sure that, you're streamlined with your accounting process. I have another question that says, can I get the recording for today's webinar? Yes, the recording will be available as early as Monday on our YouTube platform. All the webinars are being recorded. If at all you tend to miss anything, you can always go on to our playlists webinar under YouTube channel uLawPractice and take a look at it. If there is no courier charges at all, if you're being used, sorry, I have another question here. I'm probably going to take this as the last question, and then I'm going to showcase all of you how it works in uLaw. If there is no courier charges at all, do we need to return the funds to the client? Now, that's a tricky question, because if you are marking up the courier charges, if there's a profit margin, and let's say the courier charges are like entered for $50, but you never incurred any courier charges at all, you could choose to have it, or because you've already invoiced and let's say you've transferred the money, paid yourself, or you could also refund it if your client is making he or she is giving you trouble, then you can always return it too. So it's totally up to your discretion on whether the courier charges, whether it's needed to be returned to the client, do you have to do it accordingly, right? So please do keep a tab on that part. Another question here, do we get CPD EDI hours for attending this? No, these are professionalism CPD hours. So EDI is, we don't provide EDI hours. It's professionalism CPD credits what we provide. So continuity professional development, you get to, arrive at about 1 hour of professionalism CPD credits. That's what we give at uLaw. Right. I think that's a bit of questions that I've taken for now. I can always take more questions, so please keep entering it on the chat window. I'm just gonna, jump into uLaw quickly to showcase you all how the disbursements work. So let me just take any file that's over here, okay? And I'm going to show you all how disbursements work for this one, okay? So I have already invoiced this client for a flat rate of $565 of legal fee. They've already paid me the retainer and client payment. However, on my subsequently, I have incurred some disbursements, which I did not add into the previous invoice, which I want to add now. So when I go into the matter, disbursements are to be added from the matter mostly, or you can always import the bank statement into uLaw and add that way too. But I prefer this method, even though it's probably a couple of minutes more of time that's consumed here when compared to importing the bank statement and adding transactions. It's just a little old school method of going into the client matter, click on disbursements retainer, add new disbursement. Now, this is the tricky part. When you are in add new disbursement, most of the people are lost here. They're like, I see trust, I see general, and I see three different options showing general. Now, which one is it that I have to select? This is where you implement the types of disbursements that we spoke about a few minutes back. This types of disbursements that talks about whether it's a unit rate or whether it's billable, whether it has a profit margin or no. All of these are to be considered looking into the type of disbursement you're adding. That's your step number one. So you first identify the step that you are going, identify the method under which you're going to add the disbursement. Now, if you're going to add them as if it's paid from trust, you have to make sure it is one of those filing fee, court fee, any government fee. So you click on paid from trust. Now, I cannot pay it from trust. uLaw will allow me, let's say I'm going to try. Today I paid for $229 court filing fee from the trust account, let's say. uLaw will not allow me to enter $229. It will automatically go back to zero. Why? Because my trust account does not have sufficient balance. So that rings a bell for you. You have to make sure you keep it in mind, because this is where most of us make a mistake, thinking I have balance in trust for this client and make the $229 of court filing fee payment from the trust. Later on, you'll have to put in your money from general to the trust and make sure you're not showing any error later on, right? So considering all of this, I am not doing that disbursement from the trust because I don't have sufficient balance. So the next option I have is to either get additional money into my trust account from the client and make the payment from the trust, or if you don't have enough time, you do the payment from the general account and you then transfer the money from trust to the general, of course, after you raise an invoice and get paid for it from the client. So let's say in this case, I'm going to do pay disbursements from general. Now for this, again, I have three options of pay disbursements from general. I have pay disbursements from general, pay disbursement from general actuals, miscellaneous expense, third-party consultancy, and prepayment to disbursement. Now, if you're using any actuals, if you're paying only an actual amount, feel free to go there, click on pay disbursement from general actuals. Over here, I would put court filing fee. and let's say 229, tax exempt, paid to courthouse. See, these are the important things. And how did I pay? I made an online payment. Here's the reference number, and you can save. Now, if you're looking at it very closely, actuals are nothing but payment that you have actually incurred on behalf of the client. There is no room for markup, even though it is within the trust, within the general, there's no room for markup. Why? Because I am entering what I have actually spent. I cannot say that I'm charging my client $229, and I cannot say I incurred only $200 in this type of an option, because this type of an option is for you to understand that only actuals can be entered. So I'm going to save this as only an actual amount. But the next one was an add new disbursement. Again, no money in trust, so I skip and go into general, cash, other accounts, the first one. Over here, you're seeing that there are two options for me. One is the top, I won't say two options, two portions. I would say a top portion and a bottom portion. There's a thin line running between right above report expense. Now, this is what I would be charging the client for, which is, the item name that I would enter here, let's say photocopies. And I'd say I spent around, I want to charge around $40 to the client. How much did you spend? If you have your own printer, you would not be spending anything. So you would be leaving it as zero. So there's nothing that goes into your general disbursement journal. Only your invoice is going to show a 4520. But let's say you used a community center printer. So hypothetically, costed you 20 plus taxes. So the remaining amount is, of course, profit to you. So which is what you're going to enter and then come down. Let's say you paid to a community center. Then you paid using your debit card. Enter the amount. Now over here, you choose the method of payment. If you've used credit card, please put it as a business credit card number and etc. If you used your personal credit card, then you do here. One of you had owner's pocket. One of you had asked me, what if I have not incurred it now? I would probably have to pay it later. You can always do accounts payable. It will be under, whatever is your vendor. You can put it under them and save it. As simple as that. Now I'm just going to do a bank credit card, and then save it. So you're going to see. Now let's say that eventually you have mileages and actuals, other units, etc. instead of billables. Again, this is also done from the general account. You're going to show mileage. Let's say client visit. At a client office. It was about 50 kilometers from your place. Cost you at a unit rate of 0.40. You're going to charge your client appropriately, but you've incurred a different amount. Of course, that is what is going to go into your trust account. So 50 times, from your general account. So 50 times 40 cents plus 13% makes it 22.60. Excuse me. But let's say you're going to choose the expense amount actually incurred here was only $10 that you're reporting as an expense. Okay, I would rather do it as exact expense amount. So you'd be reporting the expense, and that is what is going to show you under the general or the business credit card. Paid to maybe Uber was through debit card or online payment. Save it. That's the actual expense. Likewise, you also have units, billable mileage unit. This is for the quantity of the, let's say, photocopies. It's about $20 that you're charging them again, but you've not incurred any expense amount. You're not reporting any expense, so you're going to save it. All right. Now, let's say I'm going to click on invoice. I'm going to complete this invoice. I'm doing an eco-friendly version. I'm doing only disbursements. I'm going to skip review. I want to show you guys more. So let's just download this. There's no money in the trust, remember. So I'm going to be just directly getting the money into the general account. Just bear with me for a moment. Now that's the invoice we all have here. There is no legal fee, so your invoice is empty. Now I've entered a code filing fee, photocopy, client visits, etc., which is what I'm going to now show you all. Okay. So we're going to, that invoice captured certain details. Doesn't show you some of them, like, who it was paid to and how it was paid, the method of payment, etc. It only shows you the amount, the total and subtotal, of course, with the taxes or without taxes. You're going to just simply go into accounts. There are a bit of journals and ledgers that I'd like to show you how this got, recorded under these particular ledgers and journals. So you're going to go to accounts, compliances, monthly compliances. Let's say I want to do a general disbursement journal just for today. I want to just show you how that looks here. Download it and you're going to see how it looks here. I did do 4 of these expenses, but only 3 are showing up here. Is because one of them I didn't record the bottom portion, which doesn't have a report expense. All right. Now let's say that you're going to see this disbursement journal, this date, method of payment, who you have paid it to, the description, what it is, code fee, client office visit, mileages, photocopies, etc. The actual expense, whether it was exempted, the first one was tax exempted, so there's no taxes here. And then we have the total too. This is general disbursement journal. There's another one, there's no trust disbursement journal that I did, but I can show you one. Let's say, for example, you had a new retainer to replenish, $200. With an email transferred by the client to you. So you enter that amount and I'll give him a receipt too later. I've got the money in here. You're going to click on add new disbursement, paid from trust. Let's say this is filing fee, paid to courthouse. Is an amount of 200. Click on payments. Taken out of your trust account number. You have the check number, whatever is the method of payment, choose it appropriately. And now you're going to see that your trust account also has taken out the money, whatever it was. You got it 200 into trust, was withdrawn on the same day. So let's go to accounts. Let me do the client's trust ledger just for today's date. I want to show you, not for all clients, just for Acon Chris. Download it. You're going to see this 200 that came in and went out. It's so complete that all of these fields have some or the other information. It's not incomplete. It's not carrying data that's, basically missing, but which is important, but, it needs to be shown somewhere, like email transfer number or the reference numbers, what was the particular for, and etc. But this only shows, since it's a ledger, it shows both the money that came in and went out. All right. And now let's say we go back. You would see that the matter client still owes you 319.40. I want to show you all how that is being paid. You click on payments. You try to bring 320 also, won't allow you. That's how vigilant uLaw is about allowing you to not make errors. We try to save you from making errors such as these, so that you're completely lost society compliant. Let's say they are again email transferred for the amount. Receipt. Apply. So you get to give them a receipt. You're also entering all the information that's possible. Who paid, what was it for, how much is the amount that was paid, etc. Now that's done. You go and click on General Disbursement Journal and your client's general ledger. Just enter today's date. Should have all clients. I'm doing it only for e-conference. You'll see the money that's being invoiced today. I invoiced for the following amounts. Okay, photocopies, client visit, and the court fee. And because it's general, the one I did from trust did not come under this ledger. It goes under the trust ledger. And there's a client payment also that you've received, and the balance owed by the client is 0. All right. Now, if I just observe the information that is over here, date, particulars as to, whether it's a disbursement, what is the description, what invoice number is it aligned with, the fee that's being billed, etc. You go back in there, you click on fee book. Again, today, it'll show you all of those disbursements that was billed along with the fee. Show you that there was disbursements, photocopies, and other disbursements without taxes. And that's what end of the day will be captured in the fee book. So make sure you're appropriately entering whether it's tax exempt or not, and the description needs to be appropriate too as well. You're entering not garbage details. You want to make sure that you're entering appropriate information that matches with the relevant receipts that you have, or respective receipts that you have, and end of the day you are able to get the breakup of the total. Likewise, if you go into clients trust payments, not for all clients, just today, download, you will see the $200 disbursed out of the trust account. Now, again, it shows you the method of payment with the check number, courthouse, who it was paid to, what is the matter and file number. That I understand can be, from the beginning that came in here. And you also have client information with the purpose of payment, and the total without taxes appropriately. So that's about end of the session. So I want to see if there are more questions. I hope these examples that we discussed today makes more sense to what we also discussed from the presentation. I would like to thank each and every one of you for joining in for today's webinar. And I'm going to open the floor to more questions, because the more questions you ask, the more I'd be able to provide with answers, explanations. So you're welcome to share more of these. Please feel free to add, let us know whatever, you have as your queries, maybe your own queries that you want to share in the forum here. That would be helpful for others too. So feel free to go ahead and start sharing, just so that I can keep this webinar recording short to 1 hour. I'm going to stop the recording, and but I'm keeping the floor open for more questions and for the discussion. Thank you, everyone, and catch you next week.